Welcome back. If you were with us for the previous webinar on the Forex market, if this is your first visit, then welcome as well. Before we continue, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Right. We left it that we were looking at the Euro Canadian from following this morning's downtrend. Now you can, because these webinars, these recordings are quite short, so if this is your first visit and you want to sort of catch up on what was said in the previous webinar, they will be up on both my YouTube channel and the Quantum Trading YouTube channel. Certainly not today, but certainly by tomorrow. And the reason for focusing on the Euro Canadian is because it had this very, very nice trend lower. Really, it was a break from the volume point of control. I came into it when the trend was pretty much underway, and it was a question of, well, you know, is there an opportunity to join this trend, or is there actually more of an opportunity for a reversal? And the way to look at that is obviously look at the pullbacks, but another way is to consider, well, what's ahead? You know, where is this move likely to be pausing, to be stopping? Well, certainly on the hourly chart, the S4 is the logical stopping point. But before it gets to the S4, it had to have the 6th Camarilla pivot point that we see here. In fact, it did just briefly breach it, but it found this very strong support platform of the volume point of control. This is the volume, and we can see here we've got a very nice sort of double bottom pattern that we can you know, that has actually been the springboard for the move higher. And as I said in the previous webinar, here we are. This little candle here doesn't look very much, does it? This little down candle here where we had rising volume coming down, these candles saying, oh, this is, you know, this is going to carry on lower. This is the key candle. Why? Because it's very, very compressed price action with a lot of volume underneath it. If that was more selling, well, first of all, it would have, you know, you would have had a candle that would have breached the support that we have here on the volume. Right, again. The issue now is we've got the interest rate decision with Canada coming up very, very soon, and we're going to wait and see what is happening. Moving on to the hourly chart for the matrix and the CSI, it's really, where's the yen? It's really the yen. Where's all the yen pairs are, you know, at the top, because the indices are very, very positive at the moment, even though, you know, we've got the Fed later on. I'm just going to pass you over to Dave.
And I said, oh, we've got Bitcoin. I said, yes, indeed. Hi, everybody. Good to have you here. Warm welcome from me. Just move my chat box out the way. I thought I'd start with cryptocurrencies, just for a change, because one of the questions that we both get a lot is whether, sorry, let me just get rid of that for a moment and shut that down. One of the questions we both get is, certainly with regard to VPA at any rate, is, well, can I trade cryptocurrencies? Can I apply volume price analysis in the same way? Can I use the indicators in the same way? We get asked that all the time. And the simple answer is yes, because, you know, a chart is a chart. I mean, I've got Bitcoin, I've got Ethereum, I've got Litecoin here. And if you just pop up any of these, let's put Bitcoin up because it's the most heavily traded. What have we got? I mean, you don't need to know that this is necessarily a cryptocurrency. It could be a regular currency, it could be a futures contract, could be anything. It really makes no difference. We've got the trend monitor on here, we've got volatility, we've got pivots on here, and we've got the volume down at the bottom. So, you know, you're looking at the volume profile. What is the volume telling you? Well, given that this is our average, if you like, this is it's not designed to be the de facto, you know, this is higher, this is lower. It's just to give you a gauge of, and it's taken off the daily timeframes, it's just to give you a gauge of intraday what can be considered higher, what can be considered low, you know, what is very low, what is very high. So it's just a kind of a metric there to give you a sense of extremes of volume, both higher and lower. And what you see here is, as we saw in this little rally here, I mean, longer term, I'm sure you're aware that Bitcoin has come from, I think it got to over 70,000. It's now, hasn't quite halved, but it's certainly getting on at that rate. So longer term, most certainly on the dailies and weeklies, it's been very bearish. It's found a little bit of momentum in the last couple of days to the upside. So, but from an intraday perspective, you know, you just trade what you see. But what you saw on this little rally here, we see, you know, higher volume coming in here. What have we got with higher volume? Effort to rally really hasn't gone anywhere. If this was in agreement, if price and volume were in agreement, then you would expect to see on a candle a volume bar of that particular size. You would certainly expect to see, you wouldn't expect to see a deep wick to the upside. You'd expect to see some sort of candle possibly up here, because if you look at this candle, and if we take that as our, in inverted commas, benchmark in the last few candles here, then if that is the volume required to propel the candle to that level, why is it that extra volume by 30% or more has caused no equivalent price action? In other words, this candle should have been up here somewhere, and it's not. So what is that telling you in the short term? It's telling you that this is predominantly selling in here. In other words, the market is becoming weak. The sellers are losing interest, or people are selling out, taking their profit after maybe a little rally here. And that's what that candle is telling you. It's not telling you the market's going to collapse. It's just giving you a flag warning that if you're long this market as an intraday trader, then be aware, be cognizant of the fact that at some point this is going to weaken, possibly not reverse completely and give you a trade to the downside, but certainly weaken and do this sort of behavior. You've got congestion building. That's also reflected in the fact that over those three candles, you can see here, the interest to the upside, if you like, was falling away. So in terms of buyers coming in to replace those sellers, if you like, it was very limited, it was very thin. So therefore, it's no great surprise that we see congestion forming. We've now got to move to the downside, not a huge move. In fact, the volume to that is not great. It's okay, you know, it's signaling selling. And in addition to that, as you can see here, we have the little trend line that's rolled over, has gone below this fulcrum point of midpoint, if you like, of bullish and bearish, which is why the trend monitor has now transitioned over to this darker red phase of color. And it's exactly the same on all the others. And of course, you've also got, we've got the volatility trigger come in. What do you expect when the volatility is triggered? The beauty of the volatility indicator, I keep stressing it, is it will trigger. We're on a 5-minute time frame here for Ethereum. It will trigger in real time. In other words, once the metric of moving outside of the average true range, which is what it's based on over the number of look-back bars that you have set up on the indicator, once it has exceeded that average true range limit, then the indicator will trigger. And what that means is that you don't have to wait till the end of the candle. This is a 5-minute chart. This could have come in after 30 seconds, a minute, minute and a half, whatever. But at least you know your expectation of what is like to happen next is that you're going to get some congestion, as we had here, as we had here, as we had here. Doesn't necessarily mean you're going to get a full-blown reversal, but what it does mean is you're going to, at the very least, almost certainly see some form of congestion. Worst case scenario, a reversal, neither of which you want to sit through, whichever direction you're trading. And so it's just a great little indicator. You've got trend monitor down here. You can see the trend line here is just moving down back to the fulcrum again. So we've had a decent rally supported by our trend monitor. Now it's coming back down to the midpoint there again. And the other beauty of trading cryptocurrencies is now that we developed the cryptocurrency strength indicator to work in exactly the same way. I've got it on multiples here. This is on the singles with the chart, but it works in a very, very similar way to the currency strength indicator for spot Forex. And the only major difference between how the two of them deliver the information, the visuals that you want as to what is happening, is that cryptocurrencies en masse will tend to move in the same direction, as you can see here. Now, what we've done with the indicator, we've actually split out Tether, which is a proxy for the dollar. So the red line here is Tether, USDT, down here and also down here, very oversold down here. Cryptocurrency is very overbought en masse up at the 10-minute time frame. And you use it in exactly the same way. The only difference here is that you don't see crossing points, because what you're actually looking at here is not the distilled out currency in isolation, in other words, a dollar or a pound or a euro. What you're actually looking at here is the complete cryptocurrency itself, Ethereum. This is Bitcoin down here. We've got them all here. So we're not splitting out the cryptocurrencies into their component elements. What we've done is you are trading the cryptocurrency here in completeness, if you like, against the tether, which has been split out as a representation of the dollar, because that's how cryptocurrencies are constructed, against tether or the US dollar, if you like. And also, as Anna's just reminded me, which I must admit I always forget to say, is that I've got a certain number set up here, but you can actually choose within the indicator itself, you can actually choose whichever, I go into settings, here we are. I've got these set up here, but you can actually, as long as the cryptocurrency is on trading view, then you can go in and select whichever one you wish. So it's very, very flexible in that sense. You're not isolated to the ones that are hard coded, if you like, into the indicator. You can go and select the ones that you trade or the ones that you want to focus off, and maybe isolate, and maybe you only will have 2 or 3 up here and not to see them en masse in this way. But as you will see, you can see it on the chart. What you don't get, obviously, you don't get crossovers, or it's very rare. You'll occasionally get 1 or 2 moving, slightly in opposition, as you have got here. But it's very unusual to see one cryptocurrency moving diametrically opposed to the others. They will tend to move in this en masse way. And remember, with the TradingView platform, the beauty of it is you can have this on any application, on any mobile. You can have it on mobile devices. You can have it on Mac. You can have it on Windows. It's browser based, so it really is a portable platform. It's a great platform, and it's hugely popular with our customers at the moment, I can assure you. So that's Bitcoin. I just wanted to touch on that. Just let's have a quick look and see where we are. Not looking particularly strong at the moment. Just go down to Litecoin very quickly. Similar sort of very, it's very low volume here in terms of to the upside. Trend monitor again is transitioning. Of course, the other nice thing with cryptocurrencies, which is again a little bit different, is that in terms of looking at the indicators, because they tend to all move en masse, you don't necessarily have to have them all up with the multiple timeframes. In the Forex world, if you're trading a currency, you want to have multiple timeframes up because you'll see what the indicators are doing across the time horizons. But here you can actually, if you like, relate the cryptocurrencies themselves, because the indicators themselves will tend to work in much the same way. So if you're on Bitcoin, the trend monitor on Ethereum and on Litecoin, the trend monitor will tend to do it will react in much the same way, because of the fact that all the cryptocurrencies themselves are tending to move in a very similar direction. So you can look at it in that market-related way, if you like, or instrument-related way, however you want to view it. So it just gives you another perspective, and it also gives you another perspective on volume, because when you're looking at these things, if you know that everything travels in, generally speaking, the same direction, and you see something on one that maybe you're trading another, it just gives you very different perspectives on the volume price analysis methodology in that way. So that's crypto. It's got a load of other stuff up here. I just wanted to go and have a look at very quickly. Right, this is the VIX. I've got the VIX up here. We're now, 15 minutes in to, or 10 minutes, 15 minutes into the US Open. Prior to the US Open, the VIX was climbing, and we were seeing quite a lot of buying, particularly the Swiss franc. But now what we're seeing as the markets get underway, as Anna said, there's this desire to rally. Let me just flick down here. Here we go. This is on. I've got the gone straight to the the three of them, the NQ, sorry, this is the multiples. I've got the NQ here on multiple array, multiple timeframes. Let me just go to the other workspace. I'll come back onto spot Forex in a minute. Let's just go to this one. Here we go. This is the dailies at the bottom for the YM, the NQ, and the ES. The top line is for the 5-minute equivalent. And over the last 2 days, particularly on, well, all of them have seen pretty similar price action, but very extreme price action. And this desire to rally off these, we had it day before yesterday, extreme low here. But look at the volume. The volume, I have to say, looks lightweight. It doesn't look in line. We'll come on to that more in the next couple of sessions. And similar here, these massive moves, this volume is out of balance here. And it's just, this is symptomatic of setting up for something like an FOMC meeting where there's going to be a lot of volatility. There's a lot of positioning ahead of it. When you look at these things, you've got to think in your mind, what would I do if I was a market maker? So let's just go back onto the spot Forex. Where are we? Currency pairs, currency pairs.
If you bring up the visuals over you, if you bring up the EuroCAD, it's quite interesting.
EuroCAD.
It did stop at number 3.
Okay, this was the pair I was on when Anna was talking earlier on. The last sort of 40 minutes, it was a really nice trade to the downside on Aussie Swiss. We had the Aussie falling nicely. We had the Swiss franc rising nicely. Now what we're seeing, as that sentiment shifts in terms of, you saw it falling on the VIX, so the Swiss franc is starting to roll because we're starting to see maybe some risk sentiment changing there from risk off coming to risk on. You're also seeing the yen there starting to peel away a little bit as well. So it's no surprise to see this move come to an end. This is why you've got to be aware in this business of sentiment. This is all, if you distill trading down to a very simple visual perspective, if you will, then all it is a seesaw of sentiment. On two sides, you've got risk on and risk off. And depending on whether the weight of one is heavier on one side and lighter on the other, or vice versa, that is how the market oscillates. And it really is nothing else than that. It is this constant flow of money seeking out higher risk, higher reward, or lower risk, lower reward, and that's it. And if you understand all the relationships that go on, and if you understand the fact that Forex sits at the heart of all this as the center pin, the pivot, it's the axis around which all the others rotate, then that gives you an insight into why, for example, this particular trade has come to an end. As we got into the US Open here, nice thing with NinjaTrader is actually prints real time in your local time frame, so it tells you exactly where you are. And that's the reason you're starting to see that shift in sentiment. Of course, you saw it on the CSI. It was getting up into oversold, so I beg your pardon, overbought. Equally, this never got down into oversold, but nevertheless, the Aussie as a risk currency, risk on, risk off, then again, it falls into that scenario of understanding the risk aspect of what you're doing in the trading environment. Sorry, what did you want to change this over to EuroCAD?
Yeah, that's fine. When you come over to me about it.
I can pass back to Anna. Let me pass back to Anna. Probably easier if I pass back to Anna because she's got it up.
I just want to be around at 3 o'clock.
Okay, let me pass back to Anna because she's got the charts over there you had originally, and they'll make more sense once we go through 3 o'clock. Hold on a minute.
I mentioned earlier that the reversal that we were looking at on the MT4 platform for the Euro Canadian, I said if it was, where was it going? And it was the third pivot, the Camarilla pivot on the hourly chart. And in fact, that's where it's actually come off. And but I want to stay on David's charts because he's got more time frames with NinjaTrader, and it's just a really, really nice move as we head into the BOC decision, and we just want to hold on for that and see what happens. As I said, the news is, the expectation is there is going to be price hike, which will be positive for the currency. But as I said, this also said is these few minutes up to the release itself, in all honesty, you just take a step back, wait for things to calm down, wait for a really nice, VPA setup, which with both candles, volume, and of course the all important support and resistance, and what the indicators are telling you. So can I pass back to you? Is that okay?
Back with me. We'll just stay with this for.
And sorry, the reason for not looking at the dollar yet is that moving in the same direction.
Yeah. Sorry, was that a question?
No, I'm just saying.
Yeah. Let's have a quick look at the array. I've just come back. We've got 5 minutes. Let's just go quick look at the array. There we go. Let's move that out of the way. Let's isolate out the CAD there. In fact, let's have a look at the yen pairs. Always like having a look at the yen pairs, because it's not the only pair that does this, but what it tells you straight away is that it tells you about sentiment. You're looking at that, and instantly the fact that these are all up near the top, they're stacked up at the top here. So we've got heavy selling of the yen right now. CAD yen is moving the most strongly, but then be aware of the fact what we got in 3-4 minutes time. But nevertheless, when you look at the array in this way, and remember, I make this as another point I make all the time. When you look at the array, do remember that this is looking at it over a much longer look back period. This is not a short look back period that you have on the currency matrix of 7 bars. This is looking back over, I think it's 70 or 80. How many? No, it's longer than that. It is a long period. And what you can change it, of course, but what this is trying to give you is a smoothed out perspective, if you will. So you're looking at this, even though you might be looking at this on a 5-minute time horizon, it's giving you a smoothed out perspective over that time horizon. So it's taking out all the lumps and bumps, and it's exactly the same like the trend monitor does. It takes out those lumps and bumps of pullbacks, little reversals, little hiccups here and there, and it just smooths the whole thing out. And really what you want to see is this radar effect, if you will, where all the currency pairs, and the yen's a nice one to choose because you'll see them all sweeping up to the top. So if they're all sweeping in this way, they're all moving and they're climbing, they're getting steeper, the inclination of the line will tell you the strength of the trend. So really strong trend in euro yen on 2-minute, 5-minute, less strong down here. Strongest is the CAD yen on the 10-minute time horizon. But they're all sweeping up and they are telling you about sentiment. So if you're trading yen pairs right now, you want to be trading with the flow and not against it. In other words, the flow of money is selling yen right now for whatever reason. And gradually, if that changes, then what you will see over time is you will start to see these break apart. You will start to see these move down. And if you see a complete cycle, in other words, from yen selling to yen buying, then gradually all of these will come to the bottom, same here, and it will happen across the time horizon. So in the 2-minute, it will start the first. If it's strong enough to get it to the 5, then it will, and these will start to break up. And if that change is very strong, that will get through the 10 and 15-minute, and then all start to move down. It's exactly the same principle as you use with the currency strength indicator, where you're looking at, in fact, any indicator, any time horizon, where whatever change occurs, it will occur in the fastest time frame to start with, and then move across into the slower time frames in this rippling effect. Let's just go back onto the chart again. That one. There we go. Let's see what's happening. I was just going to point this out to you as we come up to the news release. This was the candle prior. This is the previous candle on 15-minute here. Lots of volume going in here. Nice big up thrust, big candle to the upper body. It's setting up for a reaction. I'm not suggesting you traded at that point, but it's just another indication of VPA in action and the buying and selling that is constantly going on in the market. 30 seconds, is it? Okay, we will see. I'm sure we'll get a Anna's got financial juice up, which we heartily recommend. There is a free version, I think. Obviously, you get the information that is a little bit delayed. Was it 5 minutes or something? It's a little bit delayed, but the news, okay. It's anyway, you can have it for free. You can try, and I think there's probably a trial period as well. And it's it's really taken off. We used to subscribe to Talking Markets. They're no longer around. Here we go. Massive volatility. That's what you expect. As I say, Talking Markets no longer around. They went for whatever reason. But it's a hold, is it? So nothing. Okay. Lots of volatility, but then you expect that. This is on 15-second. Just go mad here for a minute. This is what I meant about the volatility indicator. It will trigger before the candle closes. I know this is 15 seconds, so it's neither here nor there. See if we get another one. There we go. Close pretty much at the end there.
Everyone was expecting a bit of an unexpected high. Good for the CAD.
Yeah. So there we go. All exciting stuff. Not tradable. Just got to wait for it. You've got to set your levels. Decide, where your levels are, where you're comfortable getting in. I mean, you're looking at. I don't know. Let's go down 15-minute chart for a minute. You've got these levels here, very strong levels of resistance in overhead at the moment. If it's going to push its way up, you've got a 7, a 5, and a 7 here. So this is a pretty strong area. Maybe if it gets through that, sits on that as the support, you may want to trade that higher. That's what you've got to start looking at. You've got to start looking at where this candle closes. This is, widespread, huge widespread, and so on and so forth. Just pick your levels. This is very much like pre-market trading, lots of volatility. Then you get the volatility coming in as the cash markets open, and off we go. See where the market settles, and once you break below or break above certain levels, those are the points you decide where actually I'm comfortable with this. I'm going to get in. I've got lots of protection above or below. Okay, I'm going to stop there. We'll be back in a few minutes. So thanks for joining us here, and we were back on the stocks in a moment.